Give us the overview and the three or four major sort of macro things that impacted the housing market in the fourth quarter.
Sure. 2019 has been a series of significant law or tax changes that have really hurt the very high end of the market. So we had the new rent law passed, which scared investors because when investors close, they become landlords. And so there's a whole series of repercussions related to that. We also have the federal SALT tax, which while it was 2 years ago in 2018, it's really taken a hold of the market where it capped $10,000 as the limit for exemptions for property taxes and state and local taxes. And then we have the mansion tax, and the mansion tax was implemented July 1st, and that has really slowed. It was targeted at the high end of the market, and it's really slowed activity down.
Now, the different segments of the market were really interesting this time around. They always are, but with stocks at records, with Wall Street pretty much booming, even if we're hearing about layoffs, there's still plenty of jobs and well-paying jobs in finance, and New York City is booming. There were different tiers of the market that suffered more than others. Tell us about that.
Well, I think observers of the Manhattan market tend to look through the optics of a $100 million condominium. And really, we had this incredible bifurcation of the market. If you look at the market from 5 million and up, which I don't want to be cavalier, but that's the top 4% of the market, sales were down year over year 38%, which is a significant correction. However, the balance of the market, 5 million and below, was actually up 1.6%. So we have this very much a soft at the top type market, and the market becomes tighter as you move lower in price.
Now, why is it that the $5 million plus apartments did so badly in the fourth quarter? Is it something to do with new developments?
It's primarily new developments. In fact, the target price when the new development frenzy broke out 5-6 years ago was really 5 million and up, and that's where we have excess supply. We have right now we have anywhere, depends on how you count it, but we have anywhere from 6 to 9 years of unsold new development inventory, which is quite a lot. And when you think of all the taxes and law changes just in the last year or two, it's like a wet blanket on top of an already challenged market.
So at what point are sellers willing to leave their apartments, empty and unsold, as opposed to selling them for a price that they can't afford?
A lot of the wealthy seem to be starting to rent them out, which sounds very odd, but just to sort of defray the bleeding, so to speak, we've had a tremendous boom in the rental market, especially at the high end of the rental market, as sellers that were grappling with selling their high-end properties are putting them in the rental pool for the first time, and they're being snapped up. So we're seeing a lot of rent growth at the luxury or super luxury levels.
Does that also indicate that these renters are anticipating prices will go down further and they're waiting on the market?
I think it absolutely does. I refer to it as camping out. They're just literally waiting for the moment they feel comfortable with. And right now, there's just a lot of uncertainty economically. Even though conditions seem to be good, there's just a lot for them to process, and they're waiting for the sellers to process it too and be more realistic in their pricing.
So Jonathan, put on your best forecaster hat now. You've been in the game a long time. Do the $1 to $4 million apartments, let's say, continue to go up in price, and the $5 million plus apartments continue to go down?
Well, I think what you're going to see is the 5 and up, some of them sort of melt into the 1 to 4, and we'll have more supply, which will challenge prices. You'll have some. I still think over the next year or two we have some softening ahead of us, but I think the heavy lifting in terms of the significant changes in price have already occurred, and now we're in this sort of slow grind downward.
Now, all these new developments and all these new even shopping areas and, tech hubs and so on, are they making some areas less attractive, more attractive? Where are the hot spots now?
Well, right now, there's a lot of interest in Silicon Valley, or whatever you want to call it, where all the big social media companies in downtown is very popular, and they're bringing high wages into the market, which I think initially helps the rental market, but the rental market's already tight. I think it's a little while before we see that benefit the very high of the sales market, end of the sales market, but it's still a plus.